The Canadian dollar is crashing again, now down to its 2022 low. So what is going on? What is causing this? And what has caused the massive sell-off that we've seen in the Canadian dollar over the past couple of weeks? So let's get right into the chart first of all, and let me show you what I'm talking about. So the price action has led us to break this March, which was a 7-month low actually. So we broke away from that March low and we've actually closed below that today. So the Canadian dollar is now at the same level around that zone that it was back in October 2022. And you know, that was when there was massive moves in currency markets because of what was happening in the UK with the gilt market. The pound absolutely crashed, but lots of currencies were also crashing. It wasn't just the pound. So it's very interesting what's going on. Now, obviously this week we had the Bank of Canada that came out and they held rates at 5%. The Canadian dollar dropped to that 7-month low right after they announced they were holding rates. I don't really think the Bank of Canada looks that much at the currency because they never have in the past. You know, a lot of people like to speculate that they do. And obviously a lot of people would say, well, if our currency is getting cheaper, that is going to drive demand higher for our exports. And that would be the case. But our biggest trading partner is the United States, and they're spending a lot of money on services, but not so much on the goods that are produced and that you need energy to produce. And we just had that GDP report in the United States this week as well. So it's very interesting what's going on. And if we go back to the chart here, I've got this arrow on there, and the arrow is when the GDP data came out. So on September 29th, you saw the GDP data come out, and after that, the Canadian dollar just tanked. We did our video somewhere around here. You had a little bit of a retracement, and then it's just come down again, yet again, to a new low. So obviously it might not continue this way. I think it's oversold at this position right now, but we have GDP data coming out next week on Halloween. So let's get into that GDP data and what exactly happens. If we go here, you can see that this is the month-over-month GDP data, and you can basically see September 29th, you can see that right there was when they released the preliminary number, which was 0.1%, and that is going to be for September. And they also came out with the July number, which was 0%, which was forecasted to be 0.1%. And you have to remember as well that if you look at the quarter-over-quarter GDP right now, Q2 was a 0%. So, you know, Canada's economy is effectively stalling right now. I mean, it's obvious that we're actually in a recession right now. If you want to wait until the government tells you you're in a recession and Chrystia Freeland goes, we were in a recession back then, you go right ahead. Thing is, it's really obvious right now that we are in a recession, and you're seeing all the surveys that back this up. And you'll see next week, we've got like 5-6 different surveys to go through that just paint a bleak picture of the economy and everything that's happening in Canada and how stretched that consumer really is. And you have to remember the Canadian economy is largely dependent on the housing market now and housing market related activities. And with that all going down now, what is that going to do to GDP? So GDP could in fact be negative. So GDP could actually end up being negative for Q3 when it comes out. And obviously that wouldn't be a good sign either. That doesn't mean even if we get a negative GDP report that the Canadian dollar is going to head lower. And we're going to go through some key levels in a second that I want you to keep your eye on to see whether we actually hold them. Obviously, Halloween is going to be crucial. We're going to continue to monitor this and see what happens. So you've got this level, which is at 71 cents, which I've marked out for you on the chart. That goes back to that 2022 low. So if you zoom out now and you go to a monthly chart, so let me just adjust this so you can see it a bit better. So each of these candles is now a month. So now you can really see it. So this was the October 2022 low, which was around here. And then you've got the 2020 low that's at 68 cents. And then you've also got the 2016 low, which was a double bottom, although lower for 2020 at 68 cents. So it'll be interesting to see what happens. And then if we break that 68 cents level, we could be heading as low as 61 cents. That would really have an impact. Obviously, Canada imports a lot of things from the United States. One of its main things things that it imports is food, and food prices have been absolutely soaring. And interestingly enough, I was in the grocery store last week and I was looking at the grocery prices and I saw some really good deals actually. But what I saw was a lot of the foods that were United States products had actually gone up in price. It kind of looked like they were playing mind games at the grocery store, giving you all these deals essentially, but then increasing the prices, and then obviously the deals disappear and you end up with the higher prices. It's kind of a soft way of introducing price hikes. Obviously, the grocery stores have been massively under pressure from the government, which I find absolutely hilarious because the government doesn't say anything about the banking system and the banksters, but oh no, the grocery stores, all of those are the ones to blame for the inflation. So, you know, it's kind of crazy, but it just goes to show how backward they are. And I just want to show you this from the Bank of Canada, and I have to highlight, it was Economic Woes on Twitter that actually saw this and put it out. And I'll just play this to you because it's really interesting to actually hear the Bank of Canada come out and talk about this, because generally you just don't hear them talking about stuff like this. So let's see what they're saying here. So
we expect
this is the Bank of Canada.
Government spending to grow at about 2.5%. So what that means is if all those spending plans are realized, government spending will be adding to demand more than supply is growing. And in an environment where we're trying to moderate spending and get inflation down, that's not helpful. You know, more generally, what I would say is that governments are hearing from their constituents. They are thinking more about the impact of inflation. They're thinking more about the impact of higher interest rates. And I think that's a good thing. And, you know, in that regard, you know, it would be helpful if governments considered the inflationary impact of their spending decisions when they're making their spending plans. It's going to be easier to get inflation down if monetary and fiscal policy are rowing in the same direction.
And you know, the Bank of Canada is really on point when they say that. And you can tell by his sort of rambling that he's completely off script there. So this is kind of unique because with the Federal Reserve, they are constantly asked this question about fiscal policy and the government, and they never answer. They always refuse to answer. And I always think that that's a bad thing. The Bank of Canada should actually be coming out and saying, when you're giving out all this stimulus money, you're creating inflation. And here we are. We're trying to jack up interest rates. We're trying to keep interest rates high in a highly indebted economy to get inflation back down, and you're there creating it. And that's exactly what the government has done. You know, the government, when they have all these stimulus programs, it just creates inflation. And the reason why I'm so skeptical that a conservative government is going to come in and do things differently is because I'm looking here in Alberta. And here in Alberta, we have had so many stimulus programs since Danielle Smith got in charge. So I don't really see that changing on the federal level, considering federal politics is even further left. You're just going to see more stimulus programs, more government spending, and that's not going to be a good thing for the future. So obviously what's going on with the Canadian dollar is something that we're going to have to continue to monitor. But really the rapid decline that we've seen in the Canadian dollar is definitely what I would characterize as a crash, because it happened so quickly and it happened off a catalyst, which was that GDP number. So a lot of the sell-off that we're seeing right now could be to do with the GDP number. Obviously, I've been saying for a long time on this channel, US dollars, get US dollars, US treasuries. You guys who've been following the channel know this well, that I've been saying US dollar, US treasuries, that's the way to go. Not Canadian dollars, not Canadian bonds, which are yielding lower as well. And literally, the Canadian dollar has just gone straight down. And even in October 2022, when I did the video of the pound crash, I said it's very likely that you're going to see a similar thing with the Canadian dollar at some point when you get an economic crisis like happened in the UK. And yeah, you might see a rally when it hits these historic lows, just like when the UK hit that 1990 low for the pound. It had a decent rally, but now it's selling off again. So, you know, it's just absolutely insane what's going on, guys. Anyway, keep your ear close to the channel here. And if you've enjoyed this video, you might like this video here. You might like this playlist here. If you're looking for a VPN, you know where to go. Go to expressvpn.com/marketmania. You desperately need a VPN to get around Bill C-11 and all these other censorship laws that are being passed. I'll see you in the next one. Take care, guys. Bye-bye.